Welcome to Family Office World Live. I'm Ron Diamond, founder, CEO of Diamond Wealth and Family Office World Media. Today, I'm joined by Abby Stein, founder and co-chairman of Cresset, and Susie Cranston, the chief executive officer of Cresset. Cresset has grown into one of the largest multifamily offices in the world. It currently serves entrepreneurs, executives, business owners, and multi-generation families, and they manage or advise on over $250 billion. And I remember talking to Abby in maybe 2017 when it was just a concept and idea. It's incredible what you guys have built. Abby, Susie, welcome to the show.
Thank you, Ron.
Thank you. Delighted to be here.
Thanks for having us.
It's my pleasure. So first question I want to start with is, I've got a lot of stuff about Cresset because you guys have become you've built an incredible brand, an incredible franchise. But can you take a minute and just go over a little bit about your background? Because I think a lot of people, you don't just become the founder of Cresset or the CEO of Cresset serendipitously.
Susie, why don't you go first?
Well, I'm happy to, although I'll say that the true founding of Cresset is a fantastic story that Abby will tell. I had the pleasure of joining about 2 years ago, having spent my career first decade at McKinsey, working with financial institutions, and then building the wealth management firm at First Republic before joining JP Morgan. So I had a lot of larger institution experience and a lot of professional services experience working with client-centric organizations. And really, I came to Cresset because my big takeaway from having all these different experiences is that a client-first, strong culture organization is really the winning recipe. And I was incredibly fortunate to come across Cresset, which, as Abby will share, he's been building with Eric from the get-go.
My background is big career ADD. Maybe ADHD. I started as a lawyer at Kirkland & Ellis, then ran businesses for others, then became an entrepreneur, doing an entrepreneurial venture on my own, sold that, then went back to working for a former client who was trying to take over Lockheed. His name was Harold Simmons, and that was a great run. I ran some businesses for him and tried to help in the takeover Lockheed. When we failed, I decided to go off and do something else. I was recruited to co-head Continental Bank's private equity business, which I did for 5 years. And then Continental Bank was bought by Bank of America. So I spun out a series of funds called Willis Stein, which I'd probably still be doing. But in 2010, I got very sick, retired, absolutely hated retirement, wanted a huge challenge. It was a time when alternative energy was really exciting and had tremendous upside, but was in the early stages. So I built an alternative energy development company, sold that, was retired again. Eric Becker and I became very close friends through some of his travails. Unfortunately, Eric lost a daughter, and I helped him negotiate his way out of his private equity firm because he had watched how I stepped down from mine to do something different. And we were friends, and we started combining our family offices, investing in insurance company, computer refurbishing company, a bunch of real estate, a few other deals, and realized our teams like working together. We liked working together, but we were not happy with what was available for us to either build our own family offices, because we didn't really feel like that was the right answer at the scale we were, or to have someone else manage our money. So we decided that we could build something that was built by clients for clients, that was truly serving wealth creators and others, as Ron said, because now we have many clients from all different genre. But it was something where our why, if you've ever seen the Simon Sinek TED Talk about companies that know what they do and how they do it are good, companies that know why they do it are great. And our why was not only wealth optimized, which includes, tax minimization, all those things, but it was also life elevated. So we wanted to build the full suite of services so that we could stand up a family office for people of all different wealth categories, large family offices, small family offices, and to have the broadest set of services to go along with institutional equality investing, especially in the private markets.
So I remember in roughly 2000, you started what, 2018?
2017.
Got it. So, question I have for you, Abby, and then I want to go to you, Susie. You built an amazing firm, and you you previously had a very successful private equity career, as did Eric Becker. I'm guessing you were in your late 50s or something like that. Uh, when most people who have the amount of success that you've had and Eric's had, they tend to slow down a bit. You probably work more hours than most people that I know. Why is this such a passion for you?
It's interesting. When I got sick, I said three things to everybody. I said, number one, I'm very lucky to be in this country, in this generation, because what I have, my mother passed away from at a very early age, and now I have a very good chance to survive it. The second thing I said is that you really need to understand what your priorities are. It puts it in perspective because you recognize that there is a mortality issue that you didn't recognize before for most people. We just kind of go on and, we really don't think about that, and nor should we. And the third point is I'm still trying to figure that out. And as I figured it out, what I realized was that for me, and not for everybody, it's just everybody is very different. But for me, building things, working to create not only economic value, but value that you can deliver to people to impact their lives, that really is an important part of who I am and what I like to do. I love to play golf. I love to ski. I love to work out. I love to read. I love philanthropy, but I really love more than anything else building and contributing. So I really wanted to do more.
It's fascinating. So when you were diagnosed, a lot of times when people get diagnosed with something, it changes them and then they think, well, I'm just going to do what I like to do. I like to golf or whatever. You kind of failed at retirement though. And you kind of had to really dig in deep, right? To figure out and what's interesting is you could do anything. You could go skiing every day. You can play golf every day. You could do whatever you want. You were extremely successful, but you built a massive firm and you're working, I don't know if it's 100 hours a week.
Some
I'm
weeks.
going to go back to my Simon Sinek question because I love him. Why?
Well, again, first of all, it has evolved, and I'm going to come back to that. But the why is the creation, the building, the contributing, and I don't know, maybe there's some part of it that two elements may have influenced it. One is when I was sick, I felt like I wasn't done yet, and it really bothered me that I felt like I had to be done. I didn't want to be done. And then maybe the other element that I never talk about, but is my father, who had a seventh grade education and was very proud that he had a son that went through and got a graduate degree. He worked to retire. And then when he did, he was miserable. And I'm sure that's somewhere in the back of my mind too. But the second thing I want to come back to is it has evolved because bringing Susie in has been the smartest thing we've ever done. Because what it does is it creates from an incredibly entrepreneurial, scrappy business, an institutional quality business that is always going to have amazing, amazing guideposts and is always going to have great leadership. Susie is a phenomenal leader, a great strategist, and a great operator. So what that's done is also allowed Eric and me to elevate a little bit in the sense that, M&A, strategy, planning, all the things we love to do, we're doing more of. The weekly reports and all the other stuff I was doing that I liked, but I didn't love. Susie has all that. And having someone like Susie to play catch with on a daily basis has been a wonderful, wonderful thing for me.
Now, Susie, you've got an incredible reputation in the industry, but you have not been in this industry very long. You went to McKinsey. You were at First Republic for a while. What's the biggest difference and what's the biggest surprise you found working at Cresset?
Yeah. So just to clarify, when I was at First Republic, I spent about a decade building the wealth management business there. So, all in, I've probably been in this industry for, specifically wealth management for maybe close to 15 years. But so I just say that because maybe my surprise from Cresset is not exactly the same as a surprise in the industry, which I'm also happy to talk about, but we might have to go back a few years. But I think, the thing that's probably been the most surprising, actually, as I've joined Cresset is, at First Republic, and then, I was the role I had at JP Morgan was related more to the integration. We did not do the extent of family office services that Cresset offers. So we have over 150 employees that are dedicated full time to providing family office services for the families that we work with. And as I've become more fluent and built my knowledge base, it's been interesting to see how many family offices, even the largest ones in the country, don't do it all within their family office. So it was actually quite surprising to me that we do have these relationships with very large family offices where, for reasons of privacy, security, business continuity, I mean, a whole variety of very reasonable rationales, we have pieces of that family office. And so that has been an incredible way for us to really make sure we stay abreast of best practices, that we're sharing best practices, because we really do serve the full range of family offices, from the very largest to obviously people who fully outsource their family office to Cresset. Well, I'm sure not surprising to you, Ron, given your extensive experience, but that was really an interesting finding for me.
Question. So, Abby, a question for you. There's a lot of really great RIAs. Cresset's not the only. What makes Cresset, in your opinion, and then Susie, I wanted to ask you because you're coming in at a different time. What makes Cresset different from other firms?
Yeah. Well, I'll address the strategic side of it, and Susie can address the platform side of it and the operational side of it. But from a strategic perspective, the depth and breadth of our services is really unparalleled. Susie mentioned the 150 people, but our focus on continuing to build our trust company and all of our services, it's all about tax minimization. It's all about having everything in one place. AI coming into the picture, having all the data in one place is going to be so critical. And that is what Cresset has been, focused on for a long time. So the depth and breadth and organizational skills for all things that affect our clients' livelihoods and their lives, frankly, is a big differentiator. The second big differentiator is our scale. I remember when I was raising our second private equity fund, and I got a call from a Middle Eastern sovereign investment fund, and they said, we'd like to put $100 million in your fund. Well, in those days, $100 million is a lot of money. I said, great. What do you need? And they said, well, we need you to come over here to the Middle East within the next 30 days, and we need a co-investment. And I said, well, of course you'll get the right to co-invest in our deals going forward if you're that large of an investor. No, you don't understand. We want a co-investment in something that you've already done that's performing. And I'm like, oh, okay. And I said, anything else? And they said, well, we need you to be here with that too in 30 days. Well, I was on that airplane and I was there with the co-investment. I had convinced a cable operator that we invested with to make a little bit more available at the same price. I had to basically sell my firstborn. In fact, I had to sell my sister because she ended up getting married to that cable operator's son. Ultimately, that was later. So I say that was the price, I guess. But it was amazing to me what I would do in those days and what any GP will do in these days to get into someone who's allocating $250 billion of capital. So we are like a sovereign wealth fund in that regard. And so we are able to negotiate much better deals for our clients. We pass it 100% through to our clients. That's a service we provide. So it's better terms, it's pieces of the GP, it's pieces of the carry. It's all of those things that we negotiate on behalf of our clients in that scale. But it's also the third piece, which is our private markets expertise. Eric and I grew up in the private markets, and we have staffed our private markets teams with people who are phenomenal and much a cut above what you normally see.
And Susie.
Yeah, I think my answer is actually strategic as well. I think, when you look at, multifamily offices, wealth management firms, a lot of people talk about family office services. And Ron, I'm sure you would come across this all the time, right? But, for a lot of the firms that are newer in the space, making the investment into having that full suite of family office services across all the things that you need to provide is a pretty extensive investment. And I think one of the things that really differentiates Cresset is that Eric and Avi, because the genesis of Cresset was to be their own family offices, were not afraid of making a very substantial investment. And in fact, waiting to make Cresset a profitable institution for longer than probably a lot of other, founders could have been comfortable doing, knowing that that would pay benefits. And so that conviction that they had early on has really differentiated us, because today we have, less than 150 advisors at Cresset. We have 150 people in our family office services team. So when you think about what that ratio looks like at almost any other competitor of ours, right? People might say they have family office services, but when you have one family office service professional per 50 employees, that ratio gets to be a bit indicative, I think, of how deep those capabilities really are. And so the fact that we have such a high ratio, I think, is really a strategic differentiator, because if you think about what's happening in the world right now, we are sitting on a period of unprecedented wealth creation and wealth generation. I mean, we have never had so many people at the relative wealth scale that we have today. And if you think about what that means, all the services that support families that are operating at that size and scale have not been around for generations. Like, we've never needed an infrastructure to support that level of wealth the way we do today. And so that in early investment has really left us, I think, uniquely qualified and capable for supporting this, influx of families who are having to sort of figure out how to handle this level of wealth, many for the first time in this generation.
Abby, how have, since you started, and there's probably some difference, how have clients' needs evolved?
McKinsey does a study every year, and now more than 50% of the clients surveyed, $20 million plus, are saying they want more holistic services. They want everything in one place. They want one central central place of truth. And so, and they also want to be able to have their taxes prepared in the same place. They want to have tax advice in the same place. Their estate plan, at least structured, reviewed, second set of eyes in the same place. They want their risk management, whether it's insurance or cybersecurity. They want someone helping them with all of that. They want lifestyle services. They want family office administration. They want their bills paid, their reporting. They want that single source of truth and that single call. Maybe it's two people, maybe, it could be someone from family office services and someone that's doing their investments, and they may have relationships with both, or it may be one, but depending on how they're structured. But they really recognize that there's value in all of this, and that the old model of, I've got somebody to do my investments, I've got somebody to do my taxes, I've got somebody to help me with travel, I got somebody to help me with insurance. It doesn't work as well. It works much better to have it all in one place. And I think you're going to see more and more of that. And, we are really leaning into that because we think that is where it's going.
So, Susie, question for you. So typically, the way I see it, an entrepreneur has an exit, sells their company for X number of dollars, and the first thing they start doing is investing, which is not the first thing they should start doing. Talk to me a little bit about how Cresset looks at things like governance and succession, because I always tell people, when you have a liquidity event, if you can, don't invest for a year. Your estate planning attorney is going to be a very important part. Talk to me why family governance and succession is such an important part of keeping this going.
Yeah. Well, a couple things that I think are very interesting on that. To your point, one of the recent surveys that was done of family offices said 86% of family offices don't have any succession plan. Point one might be, by just having a succession plan, if you could do that early on, you're kind of ahead of the curve. But to your point about family governance, I think the thing about, achieving the level of wealth that our clients have achieved, especially when it's the first generation. You've kind of grown up in a mindset of money is the binding constraint, right? I mean, for most people, as they're going about their daily life, they have to worry about how are we going to get the bills paid, how are we going to get college paid for, all these things. And as you achieve a level of wealth, that allows you to have a family office and infrastructure, all of a sudden the binding constraints are very different, and what you're optimizing for changes. So when I say the binding constraints are different, things like time, health, right? Like those become some of the limiting factors that you have to then prioritize around. So that shifts. And secondly, oftentimes when you're talking about wealth across generations, the ability to sort of work together with your family members becomes much more important, because you're having to make joint decisions around these shared assets in a way that you don't have to when your family isn't, lucky enough to have that kind of resource base. So family governance becomes incredibly important, not just for how you manage the current moment, but also how you think about setting your family up for success over time. There's an interesting book out that you've read or had on your show about kind of where are all the missing billionaires. And that analysis shows that all these people who should have been here with billions, none of them are here. And a lot of that has to do with, do you have the right family governance and structure in place? So I think, you are spot on in the advice that you give people, Ron. And, the other thing I would say is that the way to truly generate superior returns is to make sure that your estate planning strategy, that your tax strategy, and your investment strategy, that those things are all highly integrated. And so if you haven't had time to do thoughtful planning and thoughtful analysis, that is really what you want to get as your cornerstone, because the markets will go up, markets will go down. You don't have any control over that, but how much you pay in taxes, whether they be estate taxes or ongoing taxes, that is something that you can control, and there's meaningful things you can do to change those, as we all know.
20 years ago, just to follow up on that, it's a great answer. But 20 years ago, if I was sitting around a golf club and people were talking about their investments, what I normally hear people say is, oh, yeah, I've got three, in those days, guys. I've got three guys. I got one at Morgan Stanley. I got one at Goldman Sachs. I got one at UBS. And, they're all, I'm having them compete. Today, they're going to want to say, I have one fiduciary, one person who is totally about my interests, everything that affects not only my wealth, but as Susie was talking about, my family governance, my mission, vision, and values. They can run family meetings for me. We even have something called Launch Generation, where we take their kids and grandkids off-site and we train them on business plan, philanthropy, and what it means when somebody says you're the rich kid, you buy the pizza, how you handle that. So it's just a different world today. Clients are more and more recognizing it's not about having people compete for investment returns. They're going to all be pretty similar. What it is about is getting the access to the private market things on better terms, but most importantly, maximizing what you make by tax structuring, planning, risk management, mission, vision, and values, doing what you want to do in philanthropy and all those kinds of things.
So one question that I'm asked a lot, and I'm curious on both of your perspective, it's probably going to be fairly similar. People ask, well, I just sold my company. How much money do you need to have a family office? So, and what's fascinating is I had a guy call me up with a referral and said, hey, I'm looking to start a family office. I was referred to you by so-and-so. And terrifically started talking, and he just sold his company for $30 million. Now, that's a tremendous amount of money, but you can't even contemplate having a family office with that. So, and there's no playbook for that, right? So
Right.
It's not like you need X number of dollars. So in your opinion, Abby, and then Susie, how much money do you actually need for it to make economic sense, assuming you're going to do private deals and assuming you're going to have a deal team?
Susie, you want to go, and then I'll go?
Okay, sure. So what I think most practitioners would say if you surveyed them is, the answer obviously varies depending on what you're trying to do. But I think having your own family office that you stand up yourself below 100 million of net worth it really depends on what you're trying to do with that family office. But to your point, if you want to have a deal team and a whole host of people, I mean, what I think is important for people to realize as they're thinking about what parts of a family office they might want to insource and do themselves are, one, there's a talent shortage coming. So, McKinsey has famously forecasted we're going to be missing 100,000 advisors in the next 10 years. And even if AI solves half of it, it's still a problem. Number of accounting and tax professionals is dropping dramatically. So there's for experienced talent, it's very expensive. And so as you think about how to do that, if you want to have a fully insourced team, it is pricey, and you have to make sure you have enough scale for that to be worthwhile. But I'm curious, Ab, I don't think you and I have talked about it. What would be your answer?
Oh, much higher, much higher. Because I think what you're talking about is a basic administrative family office at 100 million.
Correct.
In other words, you could have one administrative person. But here's the problem. I would say it's several $billion, because below that, you cannot afford to have top people and top expertise in each area. And so, I mean, you really need people with expertise in each asset class. You certainly need public markets expertise. You certainly need private equity expertise. You certainly need private credit expertise, venture capital expertise, real estate expertise. So, maybe you can outsource that and have an administrative type family office at a much lower number, but you can't really have all that expertise. And then even when you start talking about family governance and education, lifestyle services, insurance, all those kinds of things, it's unlikely that you're going to be able to hire the people that can do all of those things without a very, very large family office. And then the last thing is, how do you compensate them, right? So, investment professionals are used to being compensated pretty highly, and so that also makes it very difficult. I think that there are so many family offices out there that exist today that really would be better off if they were part of a multifamily office, at least in part, because I think that they're not getting the best execution in every area. I always say to people when they're new wealth creators, Ron, to your question, there's something that you did really well to create the wealth that you created, and you should keep doing that. So if you created the world's greatest solar tracking company, for solar panels, then you should continue to invest in that industry by yourself. If you were a real estate person and you did fantastically in real estate, well, continue to do that, but then diversify everything else and let professionals who are really good at it do it. And then as far as all of the administrative stuff, do you really want to have an accountant that's going to coordinate and then be back in business of doing that? Or do you want to go to fractional? I always say we used to use the term fractional family office. When you're on a NetJets plane, and you're sitting there, even though you might own an 8th interest or a 16th interest, it's the same plane as if you owned 100% of it. You're getting the same service as you owned 100% of it. It's the same food. It's the same pilots. It's the same FBO. It's the same attention. It's the same thing with Cresset. It's the same thing with an outsourced multifamily office. It's fractional. When you need it, it's there, and it is top drawer, and that's why you have it. So I think a lot of these family offices would benefit from outsourcing a substantial percentage of what they do and doing what they do great. Keep doing it, and also wanting to have one or two administrative people just to make sure that they feel good about it. That's great too.
Yeah.
I've often argued that 85-90% of the family offices that exist shouldn't exist. And again, I don't no judgment on anybody. I just think that the way that they're run, because they don't fully understand how much complexity it is and also how much it costs to do it. I remember post-crash, pre-COVID, I don't care what you invested in, you made money. Private equity went up, venture capital went up, Bitcoin went up, stock market went up, everything went up. So a lot of these families said, well, I'll do it direct. I don't need Cresset, or I don't need so-and-so to help me with this. And they made money. And then they started jacking up interest rates 3-4 years ago. And then it got hard. And then they stopped making money. And now you're at a point where, and I'm curious both of your opinions, where a lot of family offices are not only not making money like they were when interest rates are zero and everything's going up, but they're actually losing money. So question, and I think there's going to be a backlash. I think that family offices are now going to say what you said, Abby. Yeah, I was really good in real estate. I don't need Cresset for that, but I don't know anything about venture or private equity. Can you touch on that?
But look, I think you never lose the baggage you come with. So I'm a lawyer by training, and I think about fiduciary responsibility, and I feel like if you have earned a lot of wealth, you have a fiduciary responsibility to all the people that are in your family, and what you're trying to do is to maximize not just money, but a lot of things that you decide are important in the family for generations to come. And you know the saying, if you've seen one family office, if you've met one family office, you've met one family office. I keep fidgeting here because right before this interview, I was eating breakfast and I spilled on my shirt and I didn't have time to change it. So I'll stop fidgeting. If you've met one family office, you've met one. So everyone is different. But there is, I think, such a need for family offices to understand where they're really good, things they're really good at. It's the old Lee Iacocca, if you remember him, I'm old enough to remember him, who wrote a very nice book, which I actually gave Susie because I thought it was so good, where he said, look, great CEOs, and this is true of CEOs of families, they do what they do best and they delegate the rest, but keep score. So I really think there's a real need to think about the world that way. If you're the CEO of your family, you're the patriarch, you made the money, whatever you can do, great, do it. But get the best execution on those things that you don't do great. And even if you're a great real estate investor, why not talk to our real estate group about what they're seeing? Maybe that can be helpful to you.
Yeah. I would just say, I mean, it's interesting. So 80% of family offices outsource the portfolio management, to your point, Ron. So, it is what most family offices do. And, what I would say, going back to, kind of what surprised me when I joined Cresset, and this fact that even the largest family offices are still outsourcing and partnering to use shared services from firms like us. You know, how could a single family probably really justify a full-time person across all the things that they probably need help with, right? So just take the topic of like security, right? Everything from cybersecurity to physical security, to support for security if family's traveling and something happens. That's probably not something that justifies a full-time person. If you want to get somebody really great, that's an expensive thing to do. But it doesn't mean that the family doesn't need that support. And so I think that as the ability for a family office to show its value maybe gets more challenging from an investment standpoint, I think that will likely spur, and I mean, we certainly see it from the people who contact us, but maybe it's a biased sample set, but it spurs a conversation about, hey, where does it make sense for us to maybe have somebody dedicated to our family, but where are the places where, we can really benefit from, outsourcing that piece of it for our family.
I'll give you another great example of where I think it really is interesting. So we talk to lots and lots of family offices who say, wow, when you have some interesting and exciting investment opportunity, we would love to participate. But, we're family offices. We generate our own deals and we don't pay fee or carry, which is fine. We wouldn't necessarily expect them to. If it's a Cresset thing and they're a Cresset client and they have a relationship with us, they're not going to pay a fee and carry. But and then they talk about how they cobble together as family offices deals. And then we get invited to some of these and we look around and we realize the problem is there's nobody leading it. And so then you say, okay, well, what's the scale of what they're doing? And what's the advantage of what they're doing versus within $250 billion of investable capital, when we negotiate with a sponsor, we're going to get all kinds of deals out of it that we are going to get advantage terms on that they can participate in. And they can create a staff, but I don't think it's going to create that kind of opportunity, deal flow, or terms. It just can't. And so it's really so eye-opening to me what can be done with the affiliations of these family offices, and and then we see some deal flow back from them, which is great, which is also great.
I wanted to ask actually both of you, when people talk about Cresset, yes, you're managing or advising on $250 billion. You've become a massive firm, in a relatively short period of time. But the one thing people keep coming back when I talk to people who are clients of Cresset is not necessarily the returns are great, which they have been good. It's more culture. They talk about culture. Why is that so important?
Good,
Yeah,
Suze.
well, it's interesting. As I said, I spent my first decade at McKinsey, and the real question that I had as you parachute into all these different companies is sort of what is it that's the leading indicator of success in an organization? And while I was at McKinsey, we actually did a lot of research on this, and culture is, I think, one of the true reliable leading indicators of success of a firm. And I think you can feel it, right? So if you walked into Radio Shack in the waning days of Radio Shack, and the shelves are gray and there's like dust bunnies blowing around, and it's like very depressing, you kind of
Right.
left feeling like you needed a Xanax. You compare that to Apple, where people are running around in their colorful T-shirts and they are excited about their iPads and they're going to help you, and so you can feel culture, right? And so in a professional services firm, the importance of that is I think the biggest priority leadership needs to focus on. And I was really fortunate, as I said earlier, that Eric and Abby, one of the first things they did when they founded Cresset was to do a retreat and define our culture and to make that the cornerstone of what we've always used as our guiding principle. And so that has stood us in good stead, stead till through today. As we grow, one of the things that we always do is to try to stay really paranoid about culture and reinforce it in every way, from how we talk to how we lead to how we make decisions to what we recognize and reward. It is. I love that that's what you hear, Ron, because that is probably the thing Eric, Abby, and myself care about the most.
But
And
Abby,
what was the statistic, Susie, in that McKinsey study about performance?
Yeah. So the research that we did at McKinsey showed companies with strong culture have 2 to 3 times better shareholder returns. So it's very quantifiable how the strong culture translates into shareholder returns.
Yeah. So one of the things, I mean, Eric and I both, I mean, in the aggregate, about 150 companies that we had invested in. And one of the key learnings for both of us was that culture matters, and that most of our mistakes were about culture and people. They weren't about competitive positioning or industry dynamics, because if you have a great team, you may not win, but you'll survive and do okay, even if you get those two things wrong. Most of the time, not all the time. There was one little Google thing that kind of made a liar out of some of those ideas, but really, that it's very, very true. And so from the very beginning, we wanted to make sure that we had people that wanted to be at Cresset, that were acting like owners, that had extreme accountability, that treated everybody with direct but with respect. And it's translated. I mean, 99% client retention, top decile net promoter score. That's culture, and culture is critical.
now my baby, I call her my baby, Bella. She just graduated from Tulane, and 3 months ago.
Congratulations.
Yeah, that's so exciting.
I know, and she's watching, and the fact that I call her baby, I'm going to get a text. In any event, it doesn't matter. Question I have: during graduation, somebody mentioned AI, and the kids started booing, and then other people, friends, kids of friends, AI is freaking a lot of these younger people out. That's number one. And number two, it's also fundamentally changing how you could leverage what you do. So Abby, can you touch on how are you leveraging AI with Cresset? And then B, go back to your 22-year-old self, and you're just entering this strange new world. How do you embrace it and not fear it?
Okay, so I'll start, and then Susie will have some thoughts here as well. First of all, if you are not focused on what AI is doing and what AI means for the future, you are going to be left way behind. And when I say focused on it, I don't mean just reading about it. I mean engaging with it. It is the most significant transformation that we have seen in our lives, far and away. And if you're a 22-year-old to ask that question, my 22-year-old self would have been an idiot not to have been deeply rooted in AI. And I might have been that idiot. because when I was 22, I wasn't necessarily thinking that way. I was going to be a lawyer, and that's what I cared about, and I was going to be a litigator, and that was what it was about for me. Even though I kind of missed the fact that I had a business background, but it is all about, I think, thinking about the future in ways that AI can streamline processes, do things that we previously had to do manually that took hours and hours and hours. It is not necessarily thinking about AI as a replacement for humans. History would tell us that yes, some of that's going to happen, but there's also going to be a lot more job creation. And I think we have 66 projects going on right now with AI, Susie?
Yep.
And maybe take it from there, be
Yeah.
more of the
Yeah.
specifics.
I mean, listen, I think there's no doubt that, as everyone has discussed, AI is going to be really transformative in terms of productivity and transforming how we think about getting work done. I will say I downloaded Claude Copilot onto my personal laptop the other day, and I built this incredible tool that scans all my emails for all the kids' school events, and then puts them on my calendar automatically, which is incredible. But to do that, it now has full control of my home Mac. And so I think one thing I would say about AI is, that made me realize how in a regulated environment you allow people to sort of code and put things in all sorts of hidden places that you don't understand as you go. In a regulated environment, that's going to, like, how we roll that out is going to have to be
It's
a
interesting.
little bit different than how you roll that out in a software company, right? And so so I do think that the takeover of AI that happened so rapidly in software is going to look a little bit different in finance. But what I would say is that the early evidence is that what AI is doing is enabling new kinds of work and new kinds of jobs. And so I think, what I would say to young people today is, as Abby said, learn it, get familiar with it, start using it. But it doesn't mean that there's going to be no jobs. I think
Right.
the work will look different. And so, one of the most important things that we're doing at Cresset today is to think about how we're training the next generation of professionals, because the traditional training grounds for wealth management, for accounting, for tax, all of those places, they've gone away. Like, they don't work on the easy kind of standard cases to learn anymore, because that's all done by AI. So how you train to get an experienced professional in 5, 10, 15 years is going to have to look very different. And I think if firms aren't already starting to plan for that, when there's no external people that are experienced to hire, we're going to have a real war for talent. So I think work is going to look different, but I am continue to be optimistic for younger people, and so I would say lean in, and the opportunities just may look a little bit different than
Yeah.
they have.
Yeah. I would add two things. On the mentor side, I would say what I say to all young people, which is have no limit to your curiosity. Always do the right thing. And then the third one, I think today, is as you're thinking about things, get a perch. In other words, sit on top of something where you're really learning about it and you can see opportunities that are going to come from it, because there is so much change. And great businesses are built by people who were sitting one place and saw from that perch the opportunity to build something else. I mean, the first example of it was Electronic Data Systems, Ross Perot. He was a computer salesman. He saw that software was going to be that. Think about the fact that today, medical catheters, all those things are disposable. Well, they didn't used to be. They used to be reused and people got sick a lot. Well, there was a guy named Phil Morris who was seeing that and as a salesman of these reusables and decided there's got to be a better way. And so he invented the disposable. There are so many examples like that. And AI today is something that helps people. I'll just give one quick example. So with Claude, you can have, if you have all the, and this is an argument for scale and everything being in one place too. With Claude, it can look at your calendar, see what your meeting is, and pull all the relevant data from every piece of software we have at Cresset, so that a financial advisor, instead of having to search everything, goes in with Claude telling it what's probably going to come up and giving it all the background and all the facts. And it does it automatically by looking at their calendar. Now, that's positive for every young person coming up in the world because it's going to make their life easier. And I could give you countless examples in research, in investments, in other places.
I've got a good question from the crowd. We're getting several questions. Before we do, War Games. Susie, have you seen the movie War Games with Matthew Broderick?
I have not.
Okay, Abby, you saw it probably when you were younger.
Yes, but years ago.
But that's like that was one of my favorite movies. It's about, it was just fascinating to watch, and now this is becoming kind of reality. Question I have from the audience, and I'll let either Abby or Susie answer. As experts in the family culture, what do you see families overlooking that you encourage them to think more about? That's a great question.
Yeah. I can take it. I was actually just meeting with our family governance team about some of the things that are coming up the most often. And one of the things that they were sharing with me last week, actually, is that we are doing more and more sessions on how to manage conflict. So how you can effectively have hard conversations without tearing at the fabric of the relationship and do it in a constructive, non-personal way is probably one of the skill sets that most sets up families for success over generations. Because as I said, when you have a significant kind of shared interest with your family members, you're having to make decisions together that are much different than, you know, the types of decisions you have to make with your cousins or your aunts and uncles if you don't have, you know, a shared pool of resources that you're all using to fund your lifestyle, right? And so, you know, being able to sort of authentically have these conversations and not let weirdness creep up over time is really important. So that's probably one of the things that has been you know, a topic on the rise and increasingly important. You know, I think another thing I would say, Ron, you've asked a couple of questions about people who have new wealth, right? And you know, there's some really great research about sort of identity. And one of the things that we see when people have new wealth is that you know, you have preconceived notions of what it means to be wealthy, right? And you know, who you are may not be the same thing as your preconceived notion of like what it is to be wealthy, right? And so one of the things that I think a lot of people need to go through as they become more affluent or as they become truly wealthy is kind of dealing with your own identity around that and who you are within that. And so that's another area that our family governance team helps people with. And it sounds a little bit out there, but it's amazing how prevalent that topic is.
So Abby, in less than 10 years, you built this from scratch, an idea, to over 250 billion assets under advisement and management. Susie, what's your biggest challenge for the next 10 years?
Well, I mean, I think most, I was just at a McKinsey CEO conference, and I think the consensus is that we are leading through the time of the most change we've probably ever seen. You know, everything from how rapidly technology is evolving, geopolitical changes, regulatory, I mean, everything seems to be evolving really rapidly. And so I think that the challenge most leaders are facing, and that, you know, Cresset will be working hard to make sure we address appropriately, is in a world where you can't predict exactly what it's going to look like in the next 5 years. You know, how do you stay as close and ahead of the curve as much as possible around the things that make your clients' lives better and the ways you can best serve your clients? And I, you know, have been on record. I think that the best insurance policy any firm can buy in a rapidly changing world is your talent, right? Because if you have really great people who are adaptable and take ownership, then they're going to stay close to the client and they're going to stay one step ahead. I think the more you get rooted in like, this is the way we've done it and this is always how we're going to do it, you're going to have a real challenge in the next 10 years.
Abby, we got 8 minutes left or so. I could go on for hours with listening to both of you guys talk. You started the firm, right? And you've done an incredible job building it, et cetera. What do you want the legacy to be? When you look at it from a legacy standpoint, because all these entrepreneurs build these companies and they want a legacy. What does success look like 100 years from now? Because you always talk about the 100-year company.
Yeah. Well, first of all, understand we didn't do it for legacy. But if we did it started to, build it for clients by clients, right? I mean, we wanted to serve people like us. That's how we started the firm, and that was really the goal. That was our one of our whys. But I mean, I think if you think about building a 100-year firm, I think you have to think about the following things in legacy. First of all, you got to think beyond today's leadership. Now, maybe not beyond Susie because she's young, but beyond today's leadership, certainly beyond Eric and me, and building a firm that can have leaders like Susie who say the old Will Rogers line, even if you're on the right track, if you just sit there, you're going to get run over, right? So the idea being you've always got to be innovating and thinking ahead. You got to build a culture that outlasts all of us, including Susie, and continue to reinforce that culture. You got to create systems that endure, and you got to stay relentlessly, I mean relentlessly, client first. Because if you do that right, a lot of things, take care of themselves. So you continue to invest in great people, you continue to expand capabilities, you continue to innovate responsibly, and you continue to serve families for generations, putting them first. And that will leave the legacy of being the premier multifamily office in the United States, and if we expand beyond the United States, the world. We're not doing that yet. We're focused in the United States. But the idea being, if you do all those things right, the legacy will take care of itself.
Susie, what comes next for Cresset?
Yeah, I think a few things. One is, as you may know, we integrated with Monticello, which is an amazing institutional consulting firm. And when you look across, our business now, we can do the advisory, we can do institutional consulting, we have the family office services. So we are working on really making sure we also have OCIO as part of that mix, because that's the kind of integration, if you will, of the institutional consulting family office business that we have. And we, I think, are really, going to continue to see an expansion in the family office services portion of the business, right? So when you think about the opportunity there and what AI does in terms of allowing you to really provide customization at scale, those are areas you're going to see us continue to be very strong in. And, continue to be focused on culture, right? I mean, I think the most important thing we can do is continue to have great talent and great people. And as I said, that's sort of the insurance policy in an uncertain world. So you'll see a lot continuing to come out from us in terms of what we do for talent, recruiting, development, employee training, all of that, to make sure that we can serve families across generations.
Okay, two final questions, then we got to wrap up. First, how would you like people in the audience to learn more about Cresset or get in touch or learn about you guys?
Let's have coffee.
Yeah, I was going to say the same. I mean, so our website, you can sign up to have a conversation with any of our founders, with our executives. But we are here to serve. So we'd love to have a conversation. And
last question, something that I ask everybody, and I don't want the answer can't be Cresset, because this is a human business also. What do you, Abby? What do you most? I mean, you've done extraordinarily well business-wise. You've raised two fabulous kids. Smart. You've got a wonderful whatever. You've done quite well in a well-lived life. Let's just say.
Thank you.
What are you most grateful for? And then Susie, the same question to you. And
is this life and business or just
life?
Life. Okay. Well, I mean, obviously, it has to start with my wonderful wife and my two terrific children, and now I'm going to start to cry. That is, for all of us, that should be front and center in everything. I'm grateful, beyond grateful, for the opportunity to build a business alongside remarkable partners. I mean, I have remarkable partners. Eric, Susie, and many more are just remarkable people. I'm grateful for the fact that we can align the interests with our clients in such a major way. And because we can do that, today the independent space is about 11 trillion, about the same size as what the wirehouse space is, and growing much faster. And that's because of that alignment of interest and true fiduciary duty. So I'm very grateful for that. I'm grateful, that life has a lot of challenges, and I feel like I've been able to be resilient, and I'm very, very grateful for that. And I hope that continues for at least another 50 years. And then I am very grateful for building something with Susie, Eric, and others that I really do believe can outlast any one of us. And I think that's a really wonderful thing to have done.
Well, having known you and observed you again, I don't look at you as somebody who's just super successful. I just look at you as a good human being who happens to be successful.
Thank you.
Susie,
Thank you. That's
what are
very
you
nice.
Susie, what are you most grateful for?
Well, listen, I echo Abby. Family and health are two things I try to always remain grateful for. But, I think thematically, if I take a step back, I am probably most grateful for the community that I have in my life. So, the community of clients, the community of colleagues. I think who you surround yourself with is a big driver of your daily experience and who you become. And so that is something that I've tried to prioritize more and more as I've gotten older. And I feel really grateful for the company I'm surrounded with, and the two of you today in this moment, absolutely included in that.
Well, Abby and Susan, thank you both for joining us today and sharing your insights. And thank you to everyone for joining us. Another edition on Family Office World Live. You guys are awesome. And
thank you, Ron.
Just keep
Thank you so much.
being you.
Thanks, Ron, for having us. And thanks for all the great
Yeah.
work you do.
Absolutely.
Take care.